Hey there, if you follow us on our YouTube channel or our website, you know that my name is Scott Talley. I am the owner broker here at 5Market Realty, where we like to do market updates each month for people that are our clients, people that are interested in Athens area or Oconee County real estate. So if you're interested in anything involving the area real estate, be sure to click subscribe. Otherwise, we're going to dive into this month's market report for January 2026, which actually allows us to look all the way back at 2025. And one of the big things we're going to talk about is what exactly happened in 2025 and looking towards 2026 locally, more inventory, hopefully more sales. And then we're also going to use national information from Keeping Current Matters. So let's go ahead and get started here. As you know, we like to track four main things for Clark and Oconee County. That's going to be the total new listings, the days on market, the average sold price, and the total amount of sales. And we do that for these two counties because we find it represents our market probably the clearest. And then we look back and compare it over these last 3 years. But now we have all of 2025 to look at, and that gives us some clear insights into what happened. And we'll go into that a little further on a national level as well. But the first thing you want to notice is our listings here. We had just over 2,000 listings at 2,080, which represents down about a little 2%. And 2024 was a year that we actually outperformed the national market. And 2023, we had kind of a lower sales year. If you remember, I've said a lot in these market updates that 2025 looked a lot like 2023. But let's look at the things we probably need to be pointing out here. Number one, the days on market was 57 days, almost 60. Now, that's average over the two counties, and that represents a gain of 21%, so that's significant. And then the next thing we want to look at is the average sold price that was 506 for the two counties combined, representing a gain of just under 4%, really 3.6. Now, nationally, that average was 2.3, and on a state level, we'll show you later that the state level, the gain was actually different than that. The reason for that is we've had less sales this year, but our prices have gone high. So when some of these units that are in the millions do sell, they raise the bar a little bit. And so really, I feel like that number of 3.6 could be just a little high. We might be closer to a true 2.5%. And then we're looking here at that average sold price that we pointed out. We're going to go to the month of December and just look at these numbers comparing December to last December. Now, the total new listings, we were down 88, 288 from 106 the year before, representing a drop of 17%. Days on market for the month of December was 70, so that's up 14%. And then the sales price, kind of an outlier. We didn't have a lot of sales. And the next thing I want to point out to you here is, of course, the days on market going up in December when compared to last year. But really that's why this number of a gain in home price over the month of December is so high. You know, the month of December, if you go back to 2023, there was only 106, and then 2024, a strong year, 120 sales, and then this year, 109. That's just a low number. It's sort of hard to use that amount of a range, but it was down 9% from last year. The next thing I want to look at is something fairly significant. We're talking about inventory. And this is what I want to get across to you if you're a buyer, a seller, or someone that's just watching the market to understand inventory and what we're seeing change with it. Now, just below, I added that we are at 379 homes. That says, let's see, today's January 14th. So as of today, Clark and Oconee, this is the Athens MLS, not Georgia MLS. I'm not counting for sale by owners, but it's 18% above last January. As you can see under my head here, December, the listings go down. A lot of people come off the market because of the holidays, and then they'll come back on. What's significant, though, is how much further ahead we are than last year. And last year, we saw inventory build. So if we're starting 18% ahead of last year, it's fair to think that we're going to continue to see a trend of building inventory. The next one is a very interesting graph that I actually compiled the data. And I will say I used ChatGPT to get this graph, so I didn't have to spend an hour or so working on it. But this is the monthly housing inventory by the year 2021 to 2025. This is from the Classic MLS. And these lines show you the months of inventory. This is what we sometimes call the absorption rate. So how many months of housing is there based on the amount of sales we're having? So if we're having, if there's 400 homes on the market, how many months would it take to absorb that? And basically, if you look at these lines, the blue, the orange, and the green, look here, look how low they are. They're below 3, below 4. That's 21, 22, and 23. What changes is with this red and green and purple. You can see at this point, towards the end of 2023, we actually got above 4 months. And you can see this purple line. This is what's significant. Look how much higher 2025 is than the previous years. So we saw a very significant change in inventory. And let me just pull this up. This is like a demarcation line of 4 months. What 4 months of inventory means is that's when we start to get into a balanced market. balance of negotiations between buyers and sellers. We do advertisements from these market updates on Tim Bright Radio here locally, and we love Tim. We love the show. If you don't listen to it, you should. But sometimes we hear it referred to as a buyer's market. It's really becoming a balanced market between buyer and seller. If this inventory were to go above 6 months, then you would be in a true buyer's market. What we're seeing is probably this line of inventory might stay in a 4 to 5 month inventory supply. And if it does that, that's what you need to understand as a seller and a buyer. You have a balanced situation in most cases, and there can be negotiations. It doesn't mean buyers get everything they want or sellers get everything they want. It means you need to pay attention to the market. And when a buyer comes along, you may need to work with that buyer to make the transaction work. Now we're going to talk about what really happened in 2025. So 2025, the first thing I want to note, this information is from Keeping Current Matters. It helps us follow stuff on a national level because we mostly just pay attention to what's happening in our little neck of the woods. But really, we started the year in January 2025, look below my head, at just about 7% mortgage rate. And over the course of the year, we're ending the year in December 2025 at just above 6. So that's almost a full point drop over the course of the year. And I think that trend's been good. We've seen that helps affordability. And with the inventory building, we're trying to get to a more historical norm. It's just taken a minute to get there. This is one thing where the graph didn't quite come over, but it's showing the national average of home price growth. What I want you to pay attention to is our area. Do you remember when I said Oconee and Clark were about 3.5%? Well, the state of Georgia was only just over being flat. And if you look at Florida, it actually went down 2.3%. And the national average for home price appreciation was 2.3. So what does that tell you? It's flattening out. You're not riding a wave of this equity appreciation and this home price appreciation. If you're a seller, you need to be realistic about the market you're in. And if you're a buyer who needs a home, you need to know that this is where we are. We're in a much more fair balance situation of inventory and demand. So let's go to the next slide here. This is inventory has been building gradually. And this source here is realtor.com. What I want you to pay attention to is the gray lines here represent 2017, 2018, and 2019. Look, they're over almost 1,000 here. The white line represents what we did in 2025, and it's trailing just below it. These colorful lines are what happened right after and during COVID, where the inventory was much, much lower. So if I just showed you the graphs of inventory building and where we've been in 2025, it might be reasonable to assume this white line could get up here to the previous years before COVID, which would represent, what did I say? A balanced market between buyers and sellers. Not a buyer's market, not a seller's market, balancing out and returning to a more historical norm. Now, this is a forecast of mortgage rates. I always don't love this because this is really just a guess, but it is what people are going to be forecasting, and they expect a modest decline. Your source here is going to be Freddie Mae, Fannie Mae, Mortgage Bankers Association, and Wells Fargo. But as you can see, most people are expecting a pretty calm interest rate climb at around 6%. Just a few weeks ago, I believe we saw some rates get just below 6. And we probably expect a calm climate. I would love to see 5.75, but it might be more like 6.2 to 5.9, depending on what happens. But we'll watch it, and month to month, we'll keep you informed and let you know what we're seeing in the market. Another thing to note here, and this is from Redfin, is that we're seeing a change, or at least a forecasted change in wage growth relative to home price growth. Look below my head. The orange represents home price growth relative to the blue, which is wage growth. You can see in 2019 through 2021, it far outpaced the home growth, far outpaced wage growth. As you can see here in 2025 and what's forecasted in 2026, with the home price growth slowing, the wage growth can catch up. And that's what we're hoping to balance this out. What happened in COVID is something that's going to take a minute to get through. The good news is we started this in 2022. We're now heading into 2026, which is looking like a little bit more balanced, normal, and calmer waters. Inventory expected to rise in 2026. That's sort of been the message of this market update. We are expecting inventory to get a little bit higher. I told you that 4 months to 6 months was a balanced market. If we ever got over 6 months to 8 months of inventory, that would represent a true buyer's market, but we're not there. This is from Realtor Resi Club, but this is averaging out what Bright MLS, Compass, and Realtor.com expect to see in inventory of existing home sales, not new construction. Basically, the average is just under 10% at 9.9, and that would be kind of on par with what we've been saying. That's what we're expecting to see. We're seeing new listings already on January 14th. I know this company has clients that are preparing to list, so it's looking like we might have a healthy spring as long as we have the buyer demand that we need to absorb these homes. Total home sales overall are expected to rise. Now, Last year was one of the worst years we've seen in total home sales. And that was just about, this is projected at 4,700,000. And I wouldn't be surprised if it actually turns out lower than that. I think December was slower than they were expecting. And you can see in 2024, nationally, it was about the same, which was very bad. Remember, Athens and Oconee outperformed nationally in 2024, but they're looking to get over 5 million. And again, that's not a boom. That's a more historic norm. So what we're hoping for is a more balanced, more predictable, more equal negotiations between buyers and sellers as we get into 2026. Final quote before we end the video: buyers are benefiting from more inventory and improved affordability, while sellers are seeing price stability and more consistent demand. Each group should have a bit more breathing room in 2026. And that's from the chief economist at Zillow. So that again is on par with what we've said. We're seeing more inventory build, we're seeing more market time, and we're seeing sellers concede some, buyers concede some, in a more natural behaving market than we saw when we were coming through the really low supply, high demand time of COVID. Well, in the video, as we always like to, I'll cover my own head. This is our group 5M Realty. We got a few folks that work here that we don't have in the video because it takes us a long time to get these group photos updated. But anybody here can help you. Thank you for sticking with me for 11 minutes for this longer update, because we covered most of the information from 2025. Info at 5M Realty. Be sure to click subscribe. Thank you for sticking with me and following us on these market updates.